Hello and welcome to the weekly wrap video. Just a couple of things to catch you up on from the past 5 trading sessions. We are still in a situation of government shutdown in the US, which has entered into its second week and could potentially enter its third should weekend deliberations continue to remain unsuccessful. So this week the US House Republicans have tabled a bill that would extend the debt ceiling by 6 weeks, but would keep the government in a situation of partial government shutdown. As such, the US President Obama has not ceded and has as yet not signed any bill that would bring an end to this continued gridlock over in Washington. In response to this, we have seen a lot of volatility in some of the short-term T-bills over in the US, of which they would default or would default shortly after the October 17th debt ceiling deadline, which of course is Thursday next week. We have seen some of the larger funds, the likes of JP Morgan and Fidelity Investments, taking action and selling all their stakes in these money market funds in order to avoid any liquidity demands and avoid any crunches that we could see having gone beyond that October 17th tipping point. Nonetheless, heading into the close on Friday, Thursday was one of the more successful sessions of 2013, with stock markets in the US surging over 2% of the S&P 500 and the Dow Jones, allowing US asset classes to actually register some modest gains at the close on Friday, which did not appear to be the case as we saw sustained losses on Monday, Tuesday and Wednesday. But coming away from the US government concerns for one moment, we did see the Federal Reserve FOMC minutes this week not providing anything too much in terms of new information. The fact that most FOMC members still see a taper by the end of 2013, but they did preempt the US government by shutdown by saying the fiscal concerns do keep the onus on the pedal for QE over in the US. So on Thursday we saw the Bank of England keeping their rates on hold, so no surprises there as we continue to see very strong UK data, but markets do continue to perceive the Bank of England hiking rates sooner than the MPC's own economists do still forecast, so onus there still on employment figures out of the UK, which we should see over the next few weeks. Then in corporate news, we've had JP Morgan and Wells Fargo kicking off earnings season this week. They have both beaten on their EPS figures. We'll look to see if the likes of Morgan Stanley, Citigroup and Bank of America can replicate this next week. But again, all the focus on those fiscal issues in the US to see if the Republicans and the Democrats can come to any sort of weekend resolution. For the meantime, that's all from me. I hope you've had a fantastic 5 days of trade. I hope you have an even better weekend.